G'day traders and welcome to another wrap up. Now this week is a very short week. We only traded Monday, Tuesday, Wednesday. In the US they got Thanksgiving on the Thursday, and then Friday they only have a half a day, which is normally very low volume. Traders quite often have, or obviously they have the Thursday off because it is a public holiday, markets are open. They usually have the Friday off as well because it's only half a day. In saying that, many traders have the actual entire week off. They have a bit of a rostered week off, so to speak, knowing that volume is very slow. It's a very disrupted week. They figure, why not have the whole week off? And we can really see that through the market. So as we go through this Monday, Tuesday, Wednesday, you'll see price action, volume very low, the width of the markets very tight. So a combination of a few things. The fact we're quite high on these daily charts, and I'll bring up a 15-minute chart soon. You'll see we're still sitting and grinding away at the highs. And two, quite obviously, like I said before, holidays and an affected week, a lot of the volume, a lot of traders out of the market, therefore movement and width is quite tight. So here's our 15-minute chart. Here's Monday, Tuesday, Wednesday. So you can see each of the days, pretty much sticking within these channels, within these two major support and resistance lines, really consolidating these areas from about 99 up to about 1806. You can see a 6-7 point range on Monday and also Tuesday, and then Wednesday even tighter again, really just from about 801 up to about 806, so about 5-6 as well. But yeah, as far as these markets are concerned, that's a very tight trading range. Anything under 10, even 12, 15 points, it is quite slow. Let's go through it anyway and have a look. So Monday, there wasn't any major support resistance levels really for me yet. There was this one up a bit high, which we never really got to. I've got the power box here, so this is where we just mark significant high and low points within the pre-market from 8 till 10 o'clock. So you can see back here we created a bit of a swing high, and then leading up to 10 o'clock we created a swing low. And what we need to do is the market to come back at least 3 points from, or that's 12 ticks from these low areas or high areas to create a significant point. What we call this is a powerful edge within the market. We look to trade these edges, be it reversion, bounce off the edge, which is like down here, or push through, get a push through and look for a pullback and get a continuation and a break outside of the edge, either to the downside or the upside. So on these type of days, when you're expecting tight markets, when the markets are sitting at their highs, any sort of thing where you're expecting tight markets, it's ideal for reversion. I'm looking back through my trading journal, and reversions, as in trading within the range, is the trade that's coming up most often, and it's performing really well. We're seeing very few breakout trades, and even if they are breaking out, we're not getting that real support momentum from the other markets, so therefore not able to take them. So this particular area here, the market popped back within a point. We look to get within a point here, so that this one didn't actually fill, it didn't quite go through the contract levels there. But I want to highlight, if you look at across the other markets, look at them, how they're really hanging off their lows. So as this market's coming down here, this is a great area to be looking to buy and continue back up within this range that we've identified. It's a powerful area to trade as long as you've got those other markets supporting. If you're seeing the other markets breaking down through here, obviously it's telling us that there's sellers across the board. It's really something to be wary of and stay away. But if you can see a real lack of selling here, other markets showing signs of wanting to buy, really sticking up high and not pushing through these low areas, that's a great sign. So real potential there for the market to head to the upside. You can see it's just grinding away within a 5-6 tick range and eventually pushed up a little bit higher. And then late in the afternoon, it's fallen away, but it's still within quite a tight trading range. Okay, so moving on to the next day, we've got Tuesday. Again, fairly tight market. We've got a major support and resistance level down here, which the market's respected almost to the tick and bounced straight off it. We've got our significant high point and low point down here. So as we're approaching 10 o'clock, which is here, we were trying to push lower. So we let the market go as low as it needs to go. As soon as it pulls back 3 points, we mark that as a significant edge. So now we've got these two powerful edges within the market, which we look to trade. So as we're moving through this market here, there's not a lot of width, so not a lot to work with. But what we're thinking around about this point here is, as this market's pulling back a little bit, you can see if you look across to the left, see the other markets, they're already breaking their highs, they're already trying to push higher. So if we could get this market just to pop back a bit and get down to within a point of this edge, we'll really look to buy for, to hold the range and go back up the range, because we can see there's buyers and it's very powerful on the upside. And quite often, if you can get this market to drift back, it's a great buying opportunity, as long as the other markets are holding. So, in hindsight, of course, that hasn't happened here, but that's certainly what we're thinking and talking about in the trade room. It's all about having your trade setups known to you before they happen. You can see the area. Sometimes the market doesn't get there, that's fine, but you want to identify the area well and truly before it happens. You're not reacting to the market. We're telling the market what we want. So if it comes to us, we take the trade. If the market doesn't come to us and in the end it's just held and gone higher, well, then we don't take the trade. Okay, so then also the market starts pushing up to the opposite side of the range, the opposite side of this powerful, what we call the power box. Now, in this particular case, if we're looking for reversion to come back in the range, which it has a little bit, but it's not a high probability area. We're certainly not looking to try and sell off around here, because again, I'll put my cursor there, look what the other markets are doing. They're still pushing higher, breaking through, saying that there's buyers around. So what's happened is the market's drifted back a little bit, but eventually they have come up and broken outside of this edge, which is what we expected from looking at these other markets. So as far as going with the odds, this is not a good area to be looking to sell off and stay within the range. It's more likely to break out as long as you've got other markets supporting it. Okay, and that's what's happened. It hasn't happened with any sort of power and conviction, but it has happened sort of in a slow motion format, which we expect because of these tight, sort of slower markets. But we look for the breakout, even if it's just by a couple of ticks, look for a pullback candle, which would have been around about here. And as long as other markets are supporting, which is a particular case, they're all breaking higher, we look for a continuation. So this particular one, again, it's just drifted sideways. It's coming back a bit. It's still within the risk target, or within the area that we risk, which would have been down around here. And then eventually it's pushed up higher. Again, not with any major power momentum, but it's drifted and eventually got up outside the area. And then in the afternoon, just before the close of markets, we had this little bit of a sell-off. Moving on to Wednesday, which is, as I mentioned before, this is the final day of the trading week because of this short week. We've got a major support and resistance area through the center here. Now, these are already like we say in these wrap-ups, these are already predefined areas from the 15-minute charts. We see key levels in the market that it keeps reacting to. So we've got these areas which we just draw across multiple days. And as we're starting each day, we know this is a significant area within the market. So it's drawn in. We're not marketing as we're seeing this sort of happen. It was already there. What you'll see is market reacts most time to these areas because they are significant areas in the market. They're a price level which the market respects and knows because other traders are looking at it. So this particular day, you can see we've got an upper edge here. As far as the lower edge, we've had to go back. So as we're getting towards here, 8 o'clock, see we haven't formed any sort of significant low point. We've got to come down and have a sort of like a V shape. So we need it to come with 3 points down and create that V shape, which we haven't got. Push down lower here. So if it popped up here, then we've created a V here, but we haven't really got that. Doesn't really do it all through the day. So what we'd do is we just take our lowest point, which is back here at 1801.25. So that's how we've marked the lower edge of this power box. It's usually most times you'll get your powerful edges within this period here because that's when the market's most active. But sometimes we have to go back earlier. So we want to still find the powerful edges, and we want to do it within a systematic process. So we've got our power box here. Again, it's a fairly tight day. It's sort of not any sort of major width within this box. We've headed off. We've come straight up to the top of this edge here, and this is where we formed the edge. So now we're looking for a 3-point pullback. So we didn't get that till right here till midday. So even though this was sort of just grinding along sideways, you can see it just holding on its major support and resistance area. We hadn't actually formed this box until it actually pulls back 3 points and says, okay, you've got your significant high level now. So that's where we've got that sort of level there. From there, we've pushed down lower. We've come to the bottom edge. Now, this is an example of where reversion, trading within the range, holding within the range, is an ideal spot for a couple of reasons. One, we've got these tighter markets. which suits trading within the range, less likely to break out. And if I squash these other markets up, have a look at them. As we're approaching the lower edge of this box, look at these other markets. They're well and truly off their low point. So here's this same low points down here. Let me mark it with a pencil. Here's the lower edge of the power box. It's represented on the other markets. It's all relevant across the different markets. So there they are there. So as we're coming down to the bottom side of the box, look how far off these other markets are, which just says there's buyers around everywhere. They're really looking to take these markets up, and that's why we use these other markets. They're the real key to give us an indication of where these markets are heading. So if we're coming down to this powerful area, and it's powerful because normally the market will react to it. It'll either push through it or it'll either bounce off it. Now if we can see there's buyers around, other markets are holding and looking to go higher, well then we look for a bounce off it, and that's exactly what's happened. This one's, even the slow markets work quite well and bounce a good 5 points. You can see it's stuck within the range for the entire day. So that's the wrap up for the week. As I mentioned, it's a very short week, a slower week, but it doesn't mean there's not trading opportunities. You can see what we're looking at there. It's applicable to fast markets, slow markets, tight markets, wide markets. At the end of the day, we've got systematic processes that we use within the trading room, and we apply them and let price or let the day, the market action, tell us what it wants to do. Sometimes it's tight, sometimes it's wide. It doesn't really matter, and that's the beauty about having a flexible trading strategy that's also very mechanical and very systematic, and that's absolutely the best way to approach these trading markets. So good luck with your trading, all the best, and we'll speak again next week.